Sarkozy, Gordon Brown stepping down, 150 billion goes to $1 trillion, the 1,000-point drop, just a whole nother crisis out of the middle of nowhere, but not for our listeners. You've been for several years saying it would start in Europe and Greece. Webster, break it down.
Well, maybe we should start with the 1,000-point drop, since that was the dramatic thing last Thursday afternoon between about 2:30 and 3 o'clock. That wiped out, in theory at least, in terms of paper wealth, 1 trillion of paper wealth wiped out in about 10 or 15 minutes. And then, of course, they rushed back in with the plunge protection team, the PPT, the President's Working Group on Financial Markets. And by massive buying of futures in Chicago, they were able to updraft the New York market so that it came back. But now, over these days, we're getting an idea of what happened. So let me just set the stage. By Thursday of last week, there was already a panic that was building up. And the panic comes out of the fact that a group of hedge funds, a group of hedge fund hyenas, led by Soros, led by Greenlight Capital, led by Brigade Capital, led by Paulson and Company, but with Goldman Sachs, Bank of America, Merrill Lynch, and others also taking part. All of this written up in the Wall Street Journal. Nothing secret about it. They had decided to attack the bond market of Greece, Portugal, Spain, Italy as a way to find a weak flank to get at the euro. And the goal of that, of course, was to save the world predominance of the dollar by driving the euro down. The only way you could make the dollar look good is to make the euro look very bad. So they began that last December after Dubai went bankrupt out there in the Persian Gulf. So with this, they had generated then a systemic crisis, as it's been admitted to have been over the weekend. So by Thursday, we were on the brink. We were going into a systemic crisis, and the market was already down about 350 points, which is, I guess, quite substantial these days. Now, you got to remember in the background that about 2/3, 3/4 of all trades don't go through the New York Stock Exchange anymore. They go through electronic platforms, and that most of the volume, probably 3/4 or 4/5 of that, of the stocks that are traded by high-frequency traders who are actually hedge funds acting for their own accounts. So you've got high-frequency trading. These are thousands of transactions per second with no human input. The humans find out what happened later on. They're programmed computers. You've got flash trading, a variation on that, and then you've got program trading in general. So the news that I think is coming out now after the investigation, according to the Wall Street Journal of today, you have a hedge fund called Universa Investments of Santa Monica, California. And Universa Investments, again, it's a hedge fund. It's one of these deregulated operations that flies below the radar of the Securities and Exchange Commission. Nobody knows what they do most of the time. Now we find out an example. $6 billion under management. And the interesting thing about this is that this is associated with a famous theoretician. This guy's name is Nassim Taleb. And he is a theoretician of being a hedge fund hyena, which he is. And he's the author of this book called The Black Swan, The Impact of the Highly Improbable, which he wrote then in the wake of the panic in 2008. So the story now is that around 2 o'clock in the afternoon, a little bit later than that, this Universa Investments buys 50,000 stock options, derivatives, in Chicago on the Chicago Board Options Exchange. And these 50,000 stock option derivatives contracts are a bet saying that if the S&P 500, one of the leading stock indices, if the Standard & Poor's 500 falls from the current level of 1145 when they made the contract to 800, then Universa Investments gets $4 billion. Quite a nice piece of change. And this contract was bought by Barclays Capital, the representative of a British bank, actually one of the British banks that helped to drive Lehman Brothers into bankruptcy back in 2008. So Universa Investments successfully does this transaction. So if the S&P 500 crashes, they get $4 billion. Now, the market continues to fall. At this point, Barclays Bank realizes realizes, oh my God, it's falling. If it reaches 800, we'll have to pay Universa $4 billion right away. So what the Barclays people then start doing is hedging. In other words, they start selling other things so that they're covered against the fall. And this then builds up into a snowball and a cascade. And within 10 or 20 minutes, you've got more panic, a couple of high-frequency traders drop out, and then you've got your market plunge.
All right, stay there. Then we'll look at what's happening in Europe and what comes next. Webster Tarpley's our guest. Key information straight ahead.
The preacher man says it's the end of time, and the Mississippi River, she's a gold.
Webster Tarpley is our guest. Coming up, I'm going to talk about the Supreme Court nominee, Kagan. I mean, this woman is an open authoritarian, 100% anti-American on record. And they're even admitting she has almost no judicial experience. And they say, oh, that's good. She's an outsider who believes they can violate the First Amendment and arrest citizens. She supports the legislation where you can be secretly stripped of citizenship and shipped away. And this has a good chance of passing. I mean, that's how serious the times are. This is bona fide, hardcore tyranny. Going back to Webster Griffin Tarpley. Okay, so we have the 1,000-point drop. The Wall Street Journal is even admitting this. That ties into what our guest yesterday was saying with these pre-sale orders and this manipulation. Now we hear it's Greece, 156 billion, then it's 600 billion, then it's $1 trillion. Now today, the Reuters headline, they need more than $1 trillion. And people are saying, where is the money going? What's happening? They're saying this came out of nowhere. Well, not according to you, Gerald Celente, Dr. Roberts, many others we've had on. This was all coming. I mean, we a year ago put this in the Obama deception. We named Greece. You named Portugal. You named Spain. You named Italy. Right down the list, and now the UK. Our debt ratios in the U.S. are as high as Greece. They're saying austerity. That's all you talk about in the Obama deception in the fall of the Republic. And the head of the IMF laughs 2 weeks ago and says the good times are over. Ha, ha, ha. We're going to take over the whole economy. So what's happening in Europe? Where is this going? What's behind it?
Well, the common basis between this catastrophe in Wall Street, the 1,000-point drop, and the attack on Greece is a couple of things. Hedge funds using derivatives. Hedge funds using derivatives attack the New York stock market, and hedge funds using derivatives attack Greece. A good reason to ban hedge funds, to ban many kinds of derivatives, to ban credit default swaps, which are the kind that are being used to attack Greece. Credit default swap means you're saying, I, sitting in a basement in my bathrobe, am an insurance company, and I can sell credit default swaps as insurance against the bankruptcy of some company that I know nothing about, and I have no cash reserves, and there's no state registration, there's no authority over me. It's absolute lawlessness. This is now the free market. It's the abyss. So it's time to re-regulate all of that. Now, in terms of the Europeans, we talked, I believe, on Sunday night when they were putting this together. What was already clear then was that this was a systemic crisis. In other words, a breakdown crisis threatening the disintegration of a large part of the world financial system, specifically the euro and the European Central Bank. Whatever you think of those institutions, and obviously nobody likes them. I mean, I don't like them. But the idea that a chaotic collapse and catastrophic disintegration of these things would be good for anybody is very wrong. But what is clear is by Friday, you had this systemic crisis. Trichet, the head of the European Central Bank, said so. Olli Rehn, this faceless bureaucrat of the European Commission who runs these matters for them, has said the same thing. The systemic crisis was the crisis of interbank lending, what they call the interbank plumbing. It's the willingness of Barclays Bank to lend money to Deutsche Bank and vice versa, Banco de Bilbao, Santander, Unicredito of Italy, Société Générale of France, BNP Paribas. We know all these big European zombie banks. So they had reached the point where every bank was looking at every other bank and saying, I don't trust you because you have Greek bonds. And the other bank would say, I don't trust you because you have Portuguese bonds, and so on down the line. So that had frozen. And that had frozen by Friday. That was the emergency. That is what you had in the United States right after the collapse of Lehman Brothers there in the 15th, 20th, 25th of September 2008. Systemic breakdown crisis. So therefore, the European finance ministers get into this emergency meeting there in Brussels on Sunday, and they come up with this $1 trillion monstrosity, and basically everything that could be wrong with this is wrong. It's not really money. It's a commitment to come up with money. It's like Paulson coming out in 2008, right, the Secretary of the Treasury, saying, we will ask Congress for a $750 billion bailout of Wall Street derivatives. That has to be voted on, and you can remember, right, there was a moment when the House of Representatives said no. I think you've got 27 parliaments in the European Union that will have to vote on this. That's going to be chaotic. There may be somebody who says no. There are 16 countries that are in the euro. Not everybody who's in Europe is in the euro, and they will also have a say. The thing that ought to interest us is the internet